Hi guys, this is Martin from livemarkets.live. We welcome you to another trading week. We'll take a look at the last week's trading closes and how the pairs ended on the weekly, and we are mostly interested in the euro dollar and the dollar index, as they are the pairs of interest in our trading system currently. Now if you look at the weekly chart for the euro dollar, this is how it looks. Now this is the break, this is the trend being defined at 1.2 being broken, and then it fell off to 1.18, 1.15, the lows here, and then there's been a reaction. Now if this reaction was a trend change, we would have seen a reaction back up to this level here at 1.1970. Now those levels have been untested. Remember, this is a weekly chart, so this is a fall, and then we have had 1 2 3 4 5 6 7 8 weeks of trading where the markets had an opportunity to react back. Now and for these 8 weeks we have been in between a trend of between a range of 1.18 and 1.1580 in the lower side. So we can safely conclude that this trend defined here has not changed yet, and it will not change because the market had enough time to react back up. It did not, and therefore the next logical direction for the market is for this flow here to reimpose itself and fall down back to at least to this blue line, which is the 200 weekly moving average at 1.1370. Now that's a level that we are really targeting. The model's been really eyeing that. This move down was actually going here, but then it got interrupted because of some barrier options at 1.15. There was a reaction because of that. We got in somewhere here from 1.1680 to 1.1750. But the model kept adding at 1.15. Some of those trades got stopped out this morning at 1.1750. The high today has been 1.1750. So this is the longer term chart, and this is the longer term trend being defined, and the reason why it will not go higher in the next logical direction for this is to move down. That's a weekly chart. It's based on trend. Again, we always keep in direction with the longer term trend. Now on the daily chart, now just boiling it down to shorter direction. Now this is the trend again, which we just saw in the weekly chart, and we saw this reaction up and down, and then this is the trend line coming from here. Now that we take the trend line as a 50 DMA or the 50 daily moving average. Now we saw that prices have come to 1.1790 post NFP and fell down to 1.1. So there's a quick reaction on Friday. This move up here based on Donald Trump's tweet that the dollar is too strong. Now that he's not the first president who said the dollar is too strong. Bill Clinton in the 1990s said the dollar is too strong and he wanted it lower, but in the 1990s the dollar really rose. It was a golden period for the dollar. So what the president says and what the Fed does and what the economy does is completely different. So we generally can disregard what he has been saying and tweeting. It's not up to the president on what the exchange rate he will ultimately get, and the dollar is a reserve currency. The value is not determined by the US, but it is determined by foreigners who buy the spot currency and the futures, and so it's basically a dynamic of the market. Okay, having said that, now this is the market, this is a chart, and this is a trend. Now you can see this green line has been exerting a lot of pressure. It's still falling, and therefore we see a reaction down today, tomorrow, possibly by Wednesday or Thursday. We see a very strong push down back down to 1.15. There was no way to guess this move here, this green line moving from 1.16. It's an unexpected move, but then even then the move is well under the trend line, just a little bit higher, but the trend line is falling very sharply, which means that the flows will keep attracting it down. There's no scenario in which we see the euro dollar proceeding higher. Even just looking at one chart of the chart, we can tell you that you can easily say that the trend is down, and therefore it will keep falling. Now before it falls, it normally takes out a few stops, which is what it has done, taken a few of our stops at 1.1750. The ultimate area where this whole trend gets negated is 1.186. That's the level, which comes in somewhere here. That's the level, and this is a move down, and we do not see prices going there anytime soon. So we see the move down, book going back. A lot of people are talking about going higher, but then they're disregarding this trend line which is falling. this will not let the prices move very far. And and before Friday, the prices were really going down. It was not that it was the prices were fighting this trend line. It was just on Friday and Thursday that dollar really found its back, and then dollar started to fall, and those were based on two tweets. They were not based on economic fundamentals. They were not based on Fed changing its direction or the dot plot. None of those things happened. It's just Donald Trump's tweets, and they're very weak trend changes and trend drivers. So this move here, though painful, will be unwound very clearly, and when we are certain about that. Today we can see that Asia did not see much of a follow through in the euro dollar. There's been a little poke at 1.1750, but we see that falling by New York. If Donald Trump doesn't tweet today, I believe the market will fall down back to 1.1650, and before Draghi we should be below 1.16. So that's what we're expecting. We do not want to take the same drastic step we took at the USD CAD, and we know what happened. The whole thing fell off. The model was ultimately right with the US CAD going to 1.31. For those of you for whom we had closed, it was a bad loss, because ultimately the model was proven right. And before that we had the New Zealand dollar as well. Now just bringing up that chart will be very useful. That was in the algo 1, not in the algo 2, but even then we just should have trusted the model then. Look at this, is where it was 7040 and we had closed in at about 7040. It took a minor loss, but then look at what happened after that. This is exactly what is happening to the euro dollar. If you look at the charts here, this is a move down, then there's a reaction, and then there's a stall here, and in the stall we got caught up with these long handles, and then it fell off. Now look at the euro dollar. There's a big move down, there's a stall here, and there's move here. Again we're coming here. It's not moving higher. There's no push, or there's no momentum, or there's no impulse to move higher, despite being given such a huge amount of time for the market to move higher. So given that, I believe the dollar will reimpose its trend, and therefore be comfortable holding the euro dollar short. We may require some deft handling of taking some losses, and then trading. This is the hourly chart. This is a move for Donald Trump's tweet. There's been extension, but we see a very fast unwind today, possibly because of Kudlow's denial. We can see that this is a level here, so there's been a lot of sell orders. This is overbought area again, second time. There was an overbought here, oversold here, reaction back to. These are very high volatility days. Euro dollar is not used to such huge moves in space of just a few hours and days. We expect this to move down now. So euro dollar. Then we have the dollar index at 94.29. Again we see that from overbought to oversold in very quick time. Again we have come and unwound this whole move from 93.8 to we're at 94.3. Again it's just waiting for some kind of denial from the US advisors. They've already had one over the weekend when Kudlow said the Fed is independent. They're looking for a follow-up on that, and absence of any tweets from Donald Trump will make the dollar move higher, close this gap, and possibly move higher. So that's it from our side. While our positions are in losses, but this is a rationale. Never fight the trend, even though there might be a few reactions up and down. So just stay with the trend. We're still in fighting distance of the trend line, that is for euro dollar on the daily chart. This is the hourly chart. As you can see, very little follow through after this big move, and that's always a precursor to move back down, unwinding this whole move to 1.1640. Our average price is about 1.1670. We expect a break of 1.16 this week and follow through next week into 1.15. We see July ending below 1.15, which is just about 7 days from now. For it to move 200 pips in 7 days is very little problem, and therefore we expect 1.17 to break today, 1.16 and possibly 1.15 after the ECB. So that's it from our side. We'll have further updates today. We have the for dollar yen, which has fallen quite dramatically, and that's another story we'll be developing. We are no more positive on the equity markets. We have closed all our long equity positions. We believe the stock markets is at a cusp of a major correction down. So this is an update that we would like to have just before we close. I think this is important to note. We were long to 27.20 to 20. We were expecting 2900, but now this has changed. This is a curveball that happened on Friday and Thursday, Donald Trump's tweets, and This resulted in the dollar yen falling, which will result in the equity markets crashing through these lows yet. So we are no more positive on the equity markets. We would like to advise all our clients to get out of the long equity positions. Things have changed on Friday and Thursday, so that's a big one. This will further help the dollar index rise, because as you know, equity markets falling means dollar rising and yen rising. So this is important update. SPY, get out of all stock market, all stock longs, and be negative, be neutral stock markets, and we'll have a position. I think below 2700 is where we would initiate short position. So this cluster below this is where we would like to suggest that we go short the equity markets. So that's equity markets, big change. And this is the dollar yen. This is a huge move down. As you can see, it was crashing, it was moving higher and higher. We expected higher, but then this tweet here changed things, and now then there's been no recovery. It's 110.8 and 110.6, that is where the support comes in. But just the force of this move should take it down. That's very important. Dollar yen has a direct implication for stock markets, and which is one of the reasons why we are no more positive on the stock markets, because of this turnaround in dollar yen. So some major changes happening in the markets. Just be very careful trading in the dollar yen, the equity markets. But this will all help if the equity markets correct, as we are thinking it will. The dollar yen, the euro dollar is going to crash through these supports here with forceful move down, because the dollar will always strengthen during times of stock market crashes. So that's it from our side. This is Martin from livemarkets.live. We'll have more updates today, and we'll email them to you at that time. Thank you for listening.